Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast. We are super excited today. We have an amazing guest, Miss Kelly Ann Winget. Kelly, how's it going? Good morning.
Good morning. I'm just going so great.
Good. It's good to have you. We appreciate it so much, and I'm excited to jump into a conversation because for those listeners that know us, we're a commercial real estate podcast. We end up talking a lot about financial freedom, passive investing, investing in private placements, things like that. So anytime we have opportunity to have a guest that knows this world of passive investing, in addition to commercial real estate, but we have the opportunity to hear about alternative investments. And she has one of those backgrounds that's just, awe-inspiring in her arena. So if you don't know Kelly, let me introduce her at least for a second, and then I'll turn it over to you, Kelly. But she's the founder of Alternative Wealth Partners, and she's the fund manager of AWP Diversity Fund One. It's a $50 million fund that invests in alternative assets. So the alternatives, it's another opportunity outside of the stock market that gives high net worth, and high income investors the opportunity to diversify their investments and to diversify in alternative investments, which we'll talk about that. But, essentially you invest across a multiple different number of assets, all decreasing your risk. And Kelly comes from one of those families that just was, it almost sounds, you'll hear it. She was born into this. She was bred for this to be one of those financial engineering, whizzes, as well as, the oil and gas kind of assets. They have oil and gas assets in Louisiana, Texas, Oklahoma, and she successfully raised over $500 million of private capital. That's all averaged about a 10% annual return over the last decade. So let me just pause for a minute. That's $500 million if you're not good at math or it's too early in the morning. So it's quite a bit. So Kelly, thank you again. Let me turn it over to you, and in your own words, tell us who you are and what you do, and we'll just start a great conversation here.
All right. Thank you, Abel. I've been in the alternative space for a little over a decade. And like he was saying, I was born into this. Both my parents were financial professionals. They owned several businesses. They helped run several businesses. My father worked for PricewaterhouseCoopers for 20 years. Their parents and their grandparents were in the oil business. Two grandfathers that were petroleum engineers, one of which worked for the Getty Oil Company, is pretty much responsible for everything that's happening in Saudi Arabia. My lineage comes from Louisiana, but I'm here in Dallas, Texas. Over the last 10 years, I've helped companies raise capital, any small business or kind of tech startup looking for capital to go to the next level would come to me. And I would kind of walk through that process of how to reach out to accredited investors and start the conversation of, is this something you want to invest in? In the last 2 years, it kind of became pretty obvious that investors want these types of things, but they didn't want to be communicated with the way that a lot of these companies reach out to investors, which is usually a cold call saying, hey, give me your money.
Yeah.
So last year, in the middle of the pandemic, I had a lot of response from investors I'd worked with in the past saying, we don't want our money in the market. It's too manipulated by someone tweeting something. We have no idea what's going on. This pandemic has obviously shown us that markets are shifting. And I just leveraged the relationships I'd built over the last 10 years to say, you know what, it's time to manage these assets on my own. So I put together a $50 million alternatives fund that allows investors to make a single investment, but be diversified across lots of different types of assets. Typically in private placements, your minimum's 50 grand. You have to put $50,000 into one deal and hope for the best. And then you have to do that like 10 times to get diversity. The fund really just allows you to take that same $50,000, $100,000 and spread it across like 5 to 10 different assets.
Yeah. That's amazing. Well, so much to dig into. Let me, I usually end up starting with like just a little bit more about you, your background, because I always find it so interesting. Like, so, I tell everyone I'm a third generation real estate investor because my grandparents had a house, their first house, right? And then my dad, when he grew up, he had his house in a rental. So I remember going with my dad and would go to, see some rental houses. And I don't think he would ever believe that until we're doing it now, we're invested in like $100 million of commercial real estate. And obviously I don't own 100 million. I own a piece of it, but like you're saying, my money is diversified across many multiple deals. And so when we talk, it's pretty cool. So you've got an interesting background. So it sounds like very much financial, very much business, very much, just invested oriented, oil and gas. What was that like growing up? What were some of your first memories that you can remember of like being a little one and learning about numbers or investments and that kind of thing?
So when my parents got married young, they met at SMU in college, and they started. Now, I always say my mother's way ahead of her time. My father and her were flipping houses in the 80s. Like they were buying rental properties, they were fixing them up themselves, they were flipping them, and so it was interesting to have that because my house was being renovated for 20 years. Like the entire time I was living in this house, the house is being renovated.
Yeah, you were very much a real estate. You sound like any one of my real estate guests at this point.
My mom switched to renovating apartment communities in the late 90s, early 2000s. I mean, she definitely was like, I'm done in about 2004. So she was like, this is where I take my hat and dip out. But growing up, it was interesting because my grandfather was always traveling. When he retired, he was still consulting for oil companies. I have an aunt
retired. But retired.
Yeah. I don't think that if you're really good at oil and gas, you ever retire. You're always being called by somebody for something. But we were always encouraged to start businesses and, research ways to support ourselves. We were never, handed anything. It was actually so bad that I made too much money at 16 that I had to file my own taxes.
Wow.
So
your parents are like, no, not on my taxes.
I couldn't be claimed as a dependent at that point. So they were like, well, here you are, start your new life. Yeah. My first business was selling golf balls back to the golfers when they hit their balls into our backyard. So.
There you go. That's a different one. I love it. So you kind of kept, it sounds like you very much grew up around the entrepreneurial, the investing, the trying to figure out how to turn this active capital, renovation, active, apartment investing with your mom, active, you starting businesses. So it was never hey, get a good job and none of that. It was like, no, go start some businesses.
Yep.
So that was sounds like maybe the advice, and that's what you followed. So what did you do? How did you transition from like the 16-year-old to college? And then where did the investing, tell me about that little transition here.
So I was always really good at sales. So I went to school. I spent about a year and a half going to school, and it was business school, and everything that I was learning outside of the classroom seemed more valuable to me than what I was learning in the classroom. When you have two parents that are accountants, the finance part comes really easy, and the business part is what you have to learn on the street. And I went a completely different path, and I have two siblings. So I have an older brother and a younger sister, and my younger sister went to civil engineering school. My brother is a computer engineer.
Nice.
So I wasn't going to be an engineer, but I definitely was going to be able to fund the things that they were building.
I love it. I
And
love it.
so in probably my early 20s, I'm really good at Excel, and was working on some reporting tools for a business development team in an oil and gas company.
Hmm.
And that was in 2013. And if you know anything about oil and gas, oil was creeping up over $100 a barrel.
Wow. Yeah.
And this was right before shale broke out, and oil plummeted to $30. So I was working with this oil and gas company, and I was like, the numbers don't make sense at $100 a barrel. Something's going to happen. And I was very pushy about this. And I was like, I'm going to go do something else than oil and gas right now. And in late 2014, that mean oil
Yeah.
tanked. So recognizing trends is something I'm really good at. So I went and spent 4 years in California, enjoyed the beach, and worked with real estate and tech startups.
Okay.
And that was a lot of fun for a little while, but I definitely had to come back to Texas. So I moved back to Texas, and that's when I really started to focus on, the different types of alternatives that you can get involved in.
Yeah.
And then heading back into oil and gas as prices kind of leveled out, came back up to
Yeah.
$50 a barrel.
There you go. Well, what an amazing background. So, how in the world does someone raise $500 million? What, maybe just talk about at a super high level, what does that look like? How many different companies, how many different opportunities, and how does that happen?
I've worked on probably 150 different deals.
Okay.
When you break it down, it's not a lot of numbers. Like me personally raising $2 to
Sure.
$5 million a deal.
Yeah.
And,
Yeah.
it's really just about being in the right room with the right people and having real conversations with them.
Hmm.
The one thing that I learned early on was investors just want to know three things. They want to know, how much money do you want? How much money are you going to give me back? And what is the possibility of me never seeing my money again?
Hmm. Hmm.
Um, and that's about it. So if you're honest with them on those three things,
Yeah.
they're usually on board, and they can make a decision fairly quickly of like, yes, this is something I want to invest in, or no, it's not something I want to invest in.
Yeah, I love it. How much money do you want? How much money are you going to give me back? And what's my chances of losing it all?
Yep.
Well, no, there you go. Well, that's pretty simple. I'd heard from one of my buddies, and he's raised a good bit of capital, and he goes, IRR and average annual return, and my mechanics of 70-30 split and GP and LP, and this, he was going on all these
Mhm.
technical terms, and he goes, I don't say any of that. What I end up actually telling everyone is they're going to make double-digit returns in a good stable asset. The chances of our losing our money are low, something similar to what he said. And he goes, when our investors come in and they refer me to their other investors, they end up saying exactly what I told them, which is super simple. And the ones that I try to explain it, it's very hard for them to explain it to someone else what they're doing. So yeah,
Right.
this makes sense. I'm going to invest 50K. I will get back 100 over 6 years, and the chances of losing it are pretty low. I guess lower chances of it not growing, I guess, in the commercial real estate is kind of how I
Mhm.
end up saying it. But
Mhm.
I'm sure it's different across many multiple different assets. So
Well, you have to remember that your typical investor is a small business owner,
hmm. Hmm.
or they are an upper level executive, and their background is not finance. It's not due diligence on deals. It's not syndicating anything. So when you talk about all these numbers, it doesn't make any sense to them because they're not looking at this every day like we are.
Yeah. Yeah.
When we're trying to find a deal, those numbers are important to us, but we're the ones who are looking at it every day. You have, Mr. Smith that owns a plumbing company that makes 300 grand a year, and
Yeah.
it just needs, somewhere to put $100,000 a year. He just wants to know, where can I put this that isn't the bank,
Yeah.
where I'm not going to lose it, but I can make, 6 to 8% a year, and, in a couple of years, take it out, do something else, or retire. Like, that's what they want to know. They don't want to know all this other stuff. That's our job.
What a great paradigm shift. Even just what you said right now, I could pack it up and say this is a great conversation with Kelly, because I forget about this stuff sometimes. A small business owner or an executive, kind of like Abel Pacheco, pre commercial real estate investing, where I'm looking at pro formas or doing analysis and all the numbers. Like, I just wanted to make sure my money was like working.
Mhm.
So, okay, that's awesome.
Yeah.
So, along this lines, you have invested a ton of your own money, and you've done very successfully, had a great track record in what you do. 150 deals. That's nuts. So what is it that you look for as a passive investor? Give our listeners some insight on what makes a good investment, or how should I
Sure.
be looking at this, and that will probably break off into a good bit of nuggets here for us to write down.
Sure. So, for me, it's like, I don't have to be the smartest person in the room, but I definitely want to be able to find them quickly.
Mm-hmm.
And what I look for when I'm trying to find deals for myself or even the fund is the management team.
Mm-hmm.
Because if you have a really good team behind something, it's hard to fail.
Yeah.
I like to look for generational teams. So, family-owned businesses. Typically, someone's not going to be trying to screw over their dad or, their mom, their sister, their brother, those types of things.
Yeah. That's very
So
practical. Super
yes.
practical. Yeah, like a generational team. Okay, go
Mhm.
ahead.
So I like to look somewhere around the second generation, or at least that there's two generations involved and
Mm-hmm.
happily
Mm-hmm.
involved. When you have somebody that's being forced into business, that's a different story.
Yeah.
But when it's like the kids' passion project that
Yeah.
the parents are funding and helping start, that's something that I really like. One of the one of the assets in the fund that I really like, I've worked with this company for 2.5 years. It took that long. I do some long due diligence. So 2.5 years, we got
Wow.
to the
Yeah.
point where it was like, okay, now you're ready to take investor capital. And now I trust that this is going where it should be going. We've gotten rid of, kind of the fluff part of you guys just running a business to, okay, let's grow this like 10 times in the next like 3 years. And the son actually was the one that wanted to start it, and it's an ammunition manufacturer.
Mm-hmm.
So
Mm-hmm.
they are actually going to be there's only 3 primer producers in the United States. That,
Okay.
I don't know if anyone knows anything about guns, but it's like the little tiny explosive bit in a bullet. So
Yeah.
you cannot have a bullet without primer.
I think we have some Texas listeners here that
Good.
may know a few things about guns, but
Yeah.
yeah, that just that little bit of,
Mhm.
the
It's like a
explosion, like you said,
yeah. And so there's
explosive
only
in the bullet. Go ahead.
right. So there's only 3 people in the United States that make that. So
Okay.
if one of those people decides, we're only going to do military contracts, only deal with like huge distribution channels, they've just cut out all the little people.
Yeah.
So if you try to buy, when you're trying to buy ammo right now, it's really hard
Yeah.
to find. And
Mhm.
that's because there's no one doing it. This company in particular is based in Dallas, and they will be the 4th primer
The
producer in the
fourth
United States.
one. Okay, gotcha.
Mhm.
Yeah.
So those are the kind of opportunities that I'm like, okay, are you ready to take your entire operation in-house? So you're no longer waiting on somebody else to give you something. And that includes the casings to the primer to the powder to everything. It's similar to when you see the houses that are like almost done, but they're missing windows,
Yeah. Yeah.
right?
Yeah.
Because no one can find windows right now.
Yeah.
So it's the same thing. So you have all of these, reloaders that have everything except for primer. And it's just sitting around waiting for primer.
Mhm.
And that's what I'm capitalizing on. And those are the types of opportunities that I look for.
Got it. The alternatives. Now, even the word seems much bigger, because it's
Yes.
an alternative investment
Mhm.
to something than just the stock market, and people want their money moving. The stock market's a little shaky. Hello, hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. Maybe you can even tell us that. What are some of the investors that you talk to? What are their fears or worries or concerns about the stock market in general? Or maybe what insight can you share with us that they tell you about that?
Their opinions kind of range drastically. Those conversations can get really fun sometimes, but they're kind of worried that the stock market is being propped up by the media, that it's really just going to explode on everybody. In my opinion, I think you're going to have kind of this intersection of the .com bust and the housing bust happen at the same time. And, you know, if you live through those were terrible times for people's net worth. Yeah. I mean, just cut in half immediately. Yeah. And that's why I really try to stick to the diversification of the fund, because you cannot overexpose yourself to one type of asset. And that includes stocks. Like just because you own a variety of stocks still means that you're connected to the public market that is manipulated by the public. Yeah. The private space operates the opposite. I mean, you're in a regional space. So a company is doing really well in South Texas, you know, unless something crazy happens in South Texas, your investment's pretty stable, no matter what's happening in, you know, New Hampshire.
Yeah, that makes perfect sense. Makes a lot of sense. And as you're working with high net worth individuals and investors that, you know, are looking for these types of deals, you mentioned a couple of things early on. You said being in the right room and being around the right people. Networking has played, I would imagine, a super part in what you do. Maybe you can talk a little bit about like what you do to network and how you meet others, and, you know, just your common everyday things that you probably don't even, you know, really take for granted, but somebody else is like, you know what? I never thought about doing these things. So maybe talk to us a little bit about how you get into those right rooms, how you network.
Sure. So in every major city, there's probably like a business networking network company. And I'm personally part of the High Rise Network. They're all over the country. They only allow one person from each type of kind of business into each group. So you might have a group of 10 people. It's kind of like a super ultra mastermind group. But you're exposed to only people that are different than you. So you're not just in a kind of a think bubble of everyone that's just like you. I try to attend a lot of different events because I do like to source deals in real estate and oil and gas and tech and all this sort of stuff. So I'm constantly, I know 2020 kind of put a buffer on that, but you know, conferences that focus on real estate, conferences that focus on tech. And that's not even just the deal, but I like to go to the vendors too. Like when there's a real estate vendor conference. So the builders and the different types of contractors that are involved in real estate. So that's kind of the space that I like to be in, because I want to learn a lot about a lot of different things. And those people that are in those rooms are investors, whether they're invested in themselves or in other people, but just keeping myself open to conversation when I'm in those rooms.
All right. I love that. There's so many times when people ask me, how did you get started in commercial real estate? And I, as a single family investor, it was like me and my wife. I had a few people around me. That was my quote unquote team, people that have done a bunch of deals, and I would ask them, but it was my same team that I worked with for 10 years. And we bought 8 houses. And then in like under 2, we went from 8 to 800 doors. And we did it really quickly. And the easiest way was me passively investing. And then we started being a general partner principal on our own deals and raising capital and doing our own. But in that quick, the mindset change for us, or the paradigm shift, was just being around other people. And we started asking others, people we knew, people that they referred us to, and started joining different networking groups. And those networking groups led us to other people, and they expand your mind, kind of get you thinking. You're not in that, I like the word that you used, a think bubble,
Mm-hmm.
because within my professional circle of friends, I was the real estate guy because I had 8 houses. No one had 8 houses, right? Around me for the most part. And so they would ask me questions. But as soon as I got in another room where someone had 1,000 doors, I was like, oh, I'm in the wrong, I'm in the wrong space. I need to go hang out with these individuals. And now the bubble gets popped. And now I was like, oh, there's so much different thinking. Same
Mm-hmm.
thing for investing. Like you said, well, hey, not just the real estate room, not just the tech room or the oil and gas room, but really there's a big
Mm-hmm.
world out there. So the more you invest in yourself, was the other thing that I heard you say, that is really valuable. So tell us about investing in yourself. I know you've just laid out a piece of that, which is your knowledge
Mm-hmm.
and education, but what are some of the ways that people can invest in themselves right now
Sure.
so that they can make the best of their investing?
Sure. So it's really about getting a real idea of how much money you have. Um, People kind of live in this tomorrow mindset as far as money goes. Like, it's good to look forward, like, I want to be a millionaire, so these are the things I need to do to be a millionaire. But in reality, you need to exist in today. How much money
Mhm.
do you have today? How
Today.
much money does today make you tomorrow? And once you
Yeah.
get a hold of, what is my total net worth today? Is my job paying me enough? Do I need to get a new job where it has the income that'll get me to the tomorrow money? What's in my 401ks? What's in my IRA? What's in my insurance stuff? How much money do I have? That's really, really important, because sometimes I'm talking to people, I mean, they're worth 3, 5, $10 million, and they have no
Mhm.
idea how much money they have.
They don't know it. They don't
They don't know.
regularly do
Yeah.
PFS or
Yeah.
calculate all their assets, liabilities. They're like, I don't know. Accredited
Yeah.
investor, what's that?
Yeah. And it's really getting a hold of that and saying, okay, what is my investable capital now? Right.
Yeah,
What can I actually invest in something else?
my
And
investable capital. Yeah.
that's different than the money that you're investing in yourself. And that's really just about, what do you like, and what do you want to invest in, and learning about that.
Mhm.
Invest in going to conferences, invest in traveling somewhere new and seeing what the market is in that area. um, I don't recommend paying hundreds of thousands of dollars to go to some guru's, hype fest.
Mhm.
But,
Mhm.
there are plenty of like low cost events. People that are doing this every single day
Mhm.
want people to also be doing it with them. And they're
Yeah.
teaching them that way without it, without them being the investment. Right.
Mhm.
Um, that was kind of my biggest problem. I was like, I don't care how good you are at something, ever going to pay $5,000 to go see somebody talk.
Yeah.
Um,
Yeah.
um, I mean, unless you're starting from like ground zero, but I think that do a little bit more
Yeah.
Googling and some local networking stuff
Yeah.
until you decide, okay, I want to make this my profession, and then
Mhm.
invest that way. But if
Yeah.
you're just a single person investing, then there's plenty of ways to do that without going to a guru.
Yeah. 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 That's awesome. I did. So I did a number of weekend seminar courses while I was my W-2 profession. Was a couple of my last years while I was there. My wife was pregnant at the time. We had our first one, so we waited a little while till we were married sometime. But anyways, during that year, we had talked to my wife. We talked, and the mindset was, I better get education, or I better go now, because once the little ones are born, it's probably even to get it tighter in time. So we ended up traveling like to 12, 13 different states, and we went to as many different groups or education sources I could every weekend. And you're right. There was like some that were 5, 10, 15, 20 grand, But for the most part, what we ended up doing was spending a few $100s, plane trip, ticket, hotel, and then go to an event. And then at the event, there was a lot of different experts there. And that's a little bit of the investment where most people just it's hard for them to say, well, I'm going to go for a weekend. I'm going to go to a hotel, a plane ticket, and then invest all my time. And if you just do that, like you can absolutely broaden your network pretty darn quickly, and then invest in yourself with education, different mindsets, right? So,
Right.
yeah, it's great to hear. I've never heard of the High Rise Network, but I'm sure in your space, like, yeah, the High Rise Network. Duh. So I love hearing it, and thanks for giving us the opportunity. And then I like, how much money do you have today, right? How much money does today's money? How much will that bring me tomorrow? And if you don't ever take account of where you're at, then you can't set a plan to figure out, how to get to the next step, right?
Right. The easiest way. So when we talk about all these private placements, we're talking about an accredited investor. If you don't know what an accredited investor is, it means that you have an income over $200,000 a year or a net worth over $1 million, and that does not include your primary residence. You can have $1 million home and be a millionaire, right? So getting to that point, the easiest way to do that is income. It's just getting your income up. $200,000 a year is not hard to achieve when you're focused on raising your income. I was an accredited investor at 24, just through income. So, that was my focus. I wanted to get to the point where I didn't have to constantly be concerned on what is auto drafting out of my account.
Yeah.
And that's kind of everyone's dream. I think it's just like not to worry about auto drafts. And, but that's kind of your biggest focus is if you're going to be an accredited investor, it opens you up to so many more opportunities as an investor, as a passive investor, if you can get to that accreditation. As of last summer, you can actually just take your Series 65 and now you're an accredited investor. So if you want to take the fast lane, you can just take a test.
Yeah.
And start investing in alternatives.
Yeah. This is good because on that accreditation, we have talked about this a number of times on our show, but it's always good to hear it again. Because what we're doing is we're putting together like private placements. So big companies, they go public. Our deals essentially private. And the SEC says, hey, if there's regulation D, 506A, B, C, whatever. And the ones for accredited investors, you at least want to be able to look at these opportunities or have the ability to invest in them. So if you so choose, and that accreditation, like, well, if you want to have money to invest, you have to make some money. And this is always a fun one. You have to do something that creates active income so that you can make it passive, right? So let's talk about that for the last, few minutes. I think while I have you, passive investing. What does that term mean to you, and how do I go create an income stream that's passive? And let's dive into this a little bit, because I think that's how we actually met, right? We were in one of these discussion groups, and we're like active versus passive income. But yes, please tell us what that means to you.
So I love passive investing just because I don't want to do anything. I like to enjoy my life, but I also like to make a lot of money. So you can invest in people that like doing things and actively creating revenue and invest in that. And that creates your passive income. So the way that the fund works, my fund, it's all passive. So while there are things in there that are technically active, especially in oil and gas, that you have to be an active investor in order to receive those tax benefits that come with drilling, but you're not actually doing anything. You're just, in the terms of oil and gas, being an active investor just means that you're exposed to more risk. As far as like going in and having to, make the bullets or drill the wells or, build the houses, that sort of things, it's not something that I'm interested in doing. I worked really hard for the last 15 years of my life, and I just don't want to do that anymore. And that's majority of how everyone feels when they're invested in these things. The typical investor in these types of private placements are 55, 65, 70 years old, and they're done working. They don't want to work. I actually talked to a client last week that's going to move some money around because he's actively managed 10 properties and he's done. Doesn't want to do it anymore.
Yeah.
So
Yeah.
uh,
Heck yeah.
he's going to keep two, I think, for himself, and then just flip the rest of those properties into, some cash flowing cow and
Mhm.
retire. That's what he wants to do. And that's
Yeah.
pretty much how every single person over the age of 50 feels.
Yeah, I love it. That's great. I have some of that same mindset today. I'm very active. I'm trying to put as much of my active earnings into passive investments, but I have to go create that seed for myself. I've got to go
Mm-hmm.
make it so that I can go plant it. And the more of these cycles that I can get where I can do an active cycle and put it in a passive investment, I know that in the long run, as plant as many seeds as possible that double in X amount of years. And if I can keep doing that, then that's where it's going to lead me to my promised land of
Mm-hmm.
passive income only. But that, even just the mindset, I don't think I've ever heard passive investing until like maybe 2017 was the first time that somebody said, you can invest passively. And I was like, what's that? uh, I just, it's a mindset shift. If you've never heard the word, then you can absolutely invest in someone else's hard work and effort. And then
Mm-hmm.
you create passive income for yourself. And
Right.
there's also some tax benefits, I'm sure, with some of your deals in your fund, correct?
Mm-hmm. Oh yeah. And
So
oil.
go ahead.
I
Tell
know
us a
real
little bit
estate.
about these. Tell us a little bit about these
Yeah.
too.
So real estate has their own tax stuff. I actually am not a big real estate investor.
Mhm.
Surprise, surprise. But I'm like oil and gas, which can function the same way in the eyes of the government as real estate, which is
Yeah.
interesting.
I've heard there's good tax
Um,
losses there too, right?
yes. So you can 1031 exchange into oil and gas.
Hmm.
You can 1031 exchange into mineral rights, which is just kind of the real estate portion of oil and gas. You're not exposed to the drilling risk,
Yeah.
but you own like a deeded titled piece of property. It just happens to be under the ground.
Hmm.
You get paid a royalty on that. You're not exposed to the risk. You can just do a title transfer. It's the easiest way to transfer wealth in oil and gas is through royalties.
Yeah.
Um, you get a 15% depreciation allowance on your income earned off of oil and gas assets. So you're only paying taxes on 85% of that income.
Hmm.
And then on the drilling side, because there's a little bit more risk in drilling. Now, today, not so much because we all know where the oil is. So it's really just kind of operator
Mm.
error if something terrible happens.
So back then there was
Um,
more risk trying to see is there
right,
oil here? And today there's like, no, there's oil here. We just got to pull it out.
right. There was a shift probably right after 2000, 15, 16, that oil companies had less geologists and engineers
Mm.
and entire teams of accountants. They would have like
Wow.
one
Yeah.
geologist, one engineer, and like 15 accountants
Yeah.
because it
Wow.
all became a numbers game. It was, okay, we know where the oil is. We
Yeah.
just need to figure out how much we can spend to get it out and still make a
Mm.
huge profit.
Got it.
So small owner operators are doing this between like $5 and $15 a barrel. The big
Mhm.
guys like Exxon have to see 35 or more on the oil. I mean, their overhead is a little bit higher. But
Yeah.
on the drilling side, you're looking at an almost 100% tax deduction in your first year.
Hmm. Hmm.
So
Wow.
when when you need 150,000 worth of tax deduction, like you just put 500 grand into a well.
Yeah.
It just
That's it.
washes your taxes out. I get the last 3 weeks of the year, because you have to make an investment by December 31st
Hmm.
in order to get the tax benefit, and they have until March of the following year to drill. But
Yeah.
like the last 3 weeks of the year, I have like text messages, phone calls, my voicemail gets full. I'm getting like warnings that I need to delete voicemails because people are like, I need drilling now, like put me
Yeah.
in a well. And that's just the end of the year tax planning. And while that's how they structured, I'm like, you can invest in this all year long, all year long, and you can get the same tax benefit. So I'm trying to change some people's mindsets of, call me today for the same thing you're going to call
Yeah.
me the last week of December, because
Yes.
I'm going to be Christmas and New Year's mode.
Yeah.
Okay.
Yeah.
Not find a well mode.
I like it. It's a great position to be in for everyone that needs a tax deduction. They have capital gains. They're making a lot. They've had big capital events. businesses exiting. I made more than I was expecting this year, whatever the case may be. Let's, we've worked really hard for our money. Let's try to make sure we pay only the taxes on what we absolutely have to.
Right.
And, these opportunities are like, man, if I don't pull the trigger today anyways, then Uncle Sam's taking a portion of it. I might as well invest it for increase. And I think that even that mindset was one that is new. It was new to me as well. It's not something that, my dad or mom taught me. And I'm excited to learn it now and pass it down. And I'm hopefully anybody that's watching or listening right now, hopefully this is something new to you. And if it's not, man, take advantage and let's go. So anyways, Kelly, we're getting towards the end of our time, and I want to make sure we give a little bit of respect to you as well. If anybody is wanting to reach out to you and invest in your deals or talk to you about opportunities or, that type of thing, where do they reach out to? How do they go to you? And want to say thank you for having a good time with us. How do I reach out to you?
Sure. So you can contact me directly through my website, and it's alternativewealthpartners.com. I've got all that stuff set up on my phone. So if you send a message on the chat or an email, I get that immediately. My cell phone is also on the website, so you can go pull that up on there. I don't want to put it on a podcast, but you can go look on the website, and I'm pretty easily accessible. All of my clients have my cell phone number. I'm in Dallas. I like to do a lot of hands-on, face-to-face work. So, if you have questions, I'm here to answer them, whether it's about my fund or alternatives. One thing I do, if you are a high income person or high net worth, find a tax strategist that is not your broker or your CPA. There are lots of these people available, and I have a ton of referrals I can make for you. But they can get really creative and help, your tax situation. I've taught from an early age not to pay taxes. So, every way that I can save on taxes is what I do every single year.
Yeah. Yeah. I love it. And so thank you for bringing this up, right? Every once in a while, somebody will ask me and they go, I have a CPA. And I go, no, a tax strategist is who you need to reach out to, because a CPA, will do what you ask them to do when you do your taxes. But the tax strategist is one that creates some extra bit of advice or consulting, or kind of gives you the angle of how to put your money where. Can you elaborate a little bit more? What is a tax strategist? What do they do?
So they have more access to, options as far as what can I do with my money? And they're this kind of in between of your CPA and your broker and whoever else, maybe your insurance person. Because you can get kind of creative with insurance. Insurance isn't my background, but I know that you can do some creative things with insurance.
Yeah.
And I partner with a lot of insurance people. But your CPA, I love CPAs, but they are just not creative people. They are math people. They will do math, and that's about it. But they're not going to go find solutions for you. Sometimes you can find a really good CPA that also has that mindset, but they're few and far between.
Yeah. Got it. All right. Well, thank you so much. And is there anything we didn't talk about today that you really wanted to discuss, or something you were hoping I asked and we just didn't get to? Anything that you want to bring some exposure to as well?
Sure. So the best thing about my fund, and this is kind of, I never really talk about it. Maybe it's me being too humble or something, but I actually don't charge a management fee until the fund has made 8% to the client. So, and we split everything over 10%. So my motivation is totally on the back end. So that really makes the investors understand that my interest is aligned with theirs, if not more, because, I'm really performance based.
Yeah.
So the higher returns I can get on these assets, the better for everyone. But just know that when you're invested in alternative wealth, you are truly, your dollars are going into assets. It's not paying promotions. It's not paying, any type of brokerage fee or anything like that. That's all paid out of my own pocket.
Yeah, I love it. Well, a lot of things to dig into on every opportunity. One of
Mhm,
them is those fees and asset
mhm,
management fees and percentages and XYZ. And it's good to have a nice performance-based split, so that way you're like, hey man, you're gonna make some money before
mhm.
I think we have something similar to what you mentioned, like a preferred return. Hey, you get paid X percentage first.
Yes.
And that preferred return, there's no guaranteed return, right? But it's contractually pay them first and then we get some
Yep.
afterwards. And I would encourage any investor to do the same. Start to learn a little bit about this preferred returns or splits and asset management fees. It'll help a little bit more through your investing journey. So all
Mhm.
right, well, Kelly, it's been great having you, and I really appreciate your time. This has been fun. It's exactly what I was hoping for, and I feel like we scratched the surface of all the knowledge that you have. But so hopefully, we'll have you at our meetup and talk
Yes.
one of these days as well. So
Yeah.
we
San
appreciate it.
Antonio's not far. I'll pop down anytime.
Yes, ma'am. All right. Well, again, my name is Abel Pacheco. I'm your host for the Five Talents podcast. We really appreciate you listening. If you heard something today that provided value to you, I know you did, go to our podcast, like, review, rate, leave us a written review, and then go ping Kelly and reach out to her as well. And we would appreciate it. So thanks, Kelly, and talk to you all soon.
Thank you, Abel.
Thank you for listening to this episode of the Five Talents Podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who follow their dreams and achieve massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the Five Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the Five Talents podcast.